Ебать! Снял? Офигеть!
Охуеть! Бля, сейчас взрывная волна дойдет до нас.
Ты прикалываешься?
Ебанись. Нормально. Бля, ебайся.
Ukraine just hit Russia where it hurts the most. While the world watches tanks roll and missiles fly, Ukraine has quietly launched one of the most devastating economic warfare campaigns in modern history. They're hitting Russia's lifeline, their oil. For over 3.5 years, this war has raged on with no end in sight. Neither side is backing down, no ceasefire talks are working, and Russia continues to capture Ukrainian territory. But Ukraine has been playing a very different game entirely. They've discovered something crucial. Russia isn't just a military powerhouse, it's an oil empire. As the world's second largest oil exporter, Russia's entire economy runs on it. And Ukraine has decided to turn off the tap.
Kyiv has struck oil facilities deep inside Russia. Elsewhere, dozens of firefighters were called to extinguish a blaze Russia says was caused by a Ukrainian drone attack on an oil depot.
August became what many are now calling Black August for Russia. In just 1 month, Ukrainian forces targeted 11 oil refineries and 6 oil stations across Russian territory. But this wasn't random destruction. This was a surgical precision aimed at crippling Russia's economic backbone. The numbers are staggering. These attacks disrupted 17% of Russia's entire refinery capacity. We're talking about 1.1 million barrels per day gone. To put that into perspective, that's enough oil to fuel entire countries. Now, this is going to be a controversial topic, and I don't care if YouTube doesn't promote it, I'm going to expose the truth anyways. Controversial topics are suppressed by the algorithm, except when you force it to promote by clicking the like button. Thank you. Russia's total offline oil refining capacity hit a record high of 6.4 million tons. That's 65% higher than anything they had planned for maintenance. But Ukraine had other plans. It decided to hit Russia's oil facilities. Nearly half of this damage came from drone strikes alone. This wasn't just the worst month since the beginning of the war, this surpassed even the COVID-19 disruptions of May 2020. Russia was forced to completely restructure their oil export plans, increasing crude oil exports by 200,000 barrels per day from Western ports just to compensate. Ukraine's biggest attack was on the Ryazan oil refinery, Russia's largest. On August 2nd, Ukrainian drones struck this massive facility operated by Rosneft. The damage was so severe that half of its refining capacity was shut down immediately. This isn't just any refinery. Ryazan processes over 260,000 barrels per day. That's 5% of Russia's entire refining capacity. And Ukraine wasn't done with it. They hit it again on September 5th, showing no mercy. But Ryazan, that was just a trailer. Ukraine also targeted Rosneft's Saratov refinery, forcing it to completely suspend operations. With a capacity of 140,000 barrels per day, this facility processes 6 million tons of oil annually. The Sisaran refinery in the Samara region, with its 8.5 million ton annual capacity, was also hit so hard that it suspended all production and crude intake. In the Krasnodar region alone, Ukraine struck 3 separate facilities. The main Krasnodar refinery, which produces 3 million tons of light oil products annually, was set ablaze. The Slavyansk and Afipsky refineries were also hit, creating a pattern of systematic targeting across the region. Ukraine didn't stop at refineries. Its next targets hit Russia even harder. They targeted the Ust-Luga Baltic Sea export terminal, forcing it to operate at just half capacity, around 350,000 barrels per day instead of its usual output. Most dramatically, they struck the Druzhba pipeline system, hitting the Unecha pumping station. This single strike disrupted oil supplies to Hungary and Slovakia, showing how Ukraine's strategy affects not just Russia, but Russia's customers too. The Novoshakhtinsk refinery burned for 3 consecutive days after Ukrainian drone strikes. As the only refinery in Rostov Oblast with a capacity of 5 million metric tons annually, its destruction sent shockwaves through southern Russia's energy sector. The Volgograd refinery, operated by Lukoil, was completely shut down after drone attacks. The Novokuybyshev refinery halted all primary oil processing. Even the Sochi oil deposit wasn't spared, with 2 oil tanks catching fire after Ukrainian strikes. What we're witnessing isn't just military action, it's economic warfare at its most sophisticated. Ukraine has identified that Russia's war machine runs on oil revenue, and they're systematically dismantling that revenue stream. Every refinery hit, every pipeline damaged, every oil depot burning represents millions in lost revenue that Russia can't use to fund their war effort. It's a strategy that targets not just Russia's ability to fight, but their ability to pay for the fight. After almost 1,200 days of war, Ukraine has evolved from defending territory to attacking Russia's economic foundation. Now, what does all these refinery attacks mean for regular Russians on the ground? Because this is where Ukraine's strategy really shows its teeth. The moment these refineries started going offline, ordinary Russians felt it immediately. We're talking about widespread fuel shortages and rationing systems popping up everywhere, especially in places like the Far East, southern Russia, and even annexed Crimea. We're starting to see these scenes on social media. Videos of car lines stretching for kilometers at gas stations. That is what is happening across Russia. These weren't just minor inconveniences either. The shortages weren't hitting everywhere equally because of how Russia's logistics work. When you lose major refineries, you have to move fuel from other regions by rail, and their rail network just couldn't handle the extra pressure. This created these weird situations where some areas had plenty of fuel while others were completely dry, and the consequences were devastating. Fuel prices went absolutely insane. The wholesale price for premium gasoline hit all-time highs, jumping about 50% since the beginning of the war. We're talking about gas stations in places like the Primorye region, where people were paying around 78 rubles per liter. That's about $3.58 per gallon. And this was hitting people's wallets hard. Some people saw this crisis as an opportunity and started exploiting it. Entrepreneurs were selling gasoline online for as much as 220 rubles per liter. That's over $10 a gallon. Black market fuel sales started popping up everywhere, which shows just how desperate the situation has become. Now, the Kremlin is really worried about this because they know rising fuel prices and shortages can spark social unrest. This makes the energy sector not just about money, but about political stability. Ukraine knew exactly what they were doing. They wanted to make sure regular Russians felt the consequences of this war in their daily lives. In Crimea, multiple gas station chains faced serious shortages, with some facilities going completely without fuel for several days straight. In the Russian Far East region, it got so bad that the Kurylsky district had to suspend public gasoline sales entirely and set up these card-based rationing systems just to control who could get fuel. Yeah, it actually got that bad. But Ukraine's preparations suggest it has much bigger plans. Here's what's really impressive about Ukraine's capability. Their drone production has exploded. We're talking about going from 20,000 drones per month in 2024 to 200,000 per month in 2025. That's an impressive 10-fold increase. They now have approximately 500 drone manufacturers operating in the country. This massive scale-up is what made all these sustained, coordinated strikes possible during what they're calling Black August. Ukraine's direct attack was deadly, but their psychological warfare was the deadliest. You see, there's another layer to this campaign that's really fascinating: the psychological warfare aspect. Workers at Russian oil refineries started refusing to show up to work because they were scared of getting hit by Ukrainian drones. So Ukraine wasn't just destroying facilities, they were creating fear among the people who run these critical infrastructure sites. This fear factor made the production problems even worse, because even refineries that hadn't been hit couldn't operate at full capacity due to staffing issues. The immediate consequences of this August drone campaign created the most severe domestic energy crisis Russia has faced since the conflict began. Gasoline prices on the St. Petersburg International Mercantile Exchange for the highest octane fuel spiked to levels 50% higher than in January of 2025. The geographic pattern of shortages perfectly reflected Ukraine's strategic targeting, especially along what experts are calling the Ryazan-Volgograd arc. Ukraine was clearly winning. At least, well, that's what everyone thought, because Russia was ready with its plans. On July 28, 2025, Russia slammed on the brakes with a complete ban on gasoline exports, hoping to redirect all that fuel back to their domestic market. That makes sense, right? Keep the gas at home for your own people. Except it didn't work. Prices kept climbing anyway, showing just how badly Ukraine had damaged their refining capacity. The government got really aggressive with oil companies, pressuring them not to raise prices too much. They even started quietly tapping into their strategic petroleum reserves, the emergency stash they keep for disasters, though officials didn't want to admit this publicly because it would look weak. Here's where it gets embarrassing for Russia. Moscow had to quietly arrange gasoline imports from Belarus, completely reversing their traditional trade flows. Think about that. Russia, one of the world's biggest oil producers, having to import gasoline because their refineries were knocked out. They tried implementing retail price controls too, but these proved completely useless against market forces. When you don't have enough supply, controlling prices just creates more shortages and black markets. The export ban was initially planned through August 31st, but when September rolled around and shortages were still everywhere, they had to extend it. This showed everyone that their quick fixes weren't working at all. Energy Minister Nikolai Shulganov tried to sound confident, publicly claiming all damaged refineries would be back online in early June of 2025. That turned out to be completely wrong. Western sanctions had cut Russia off from critical refinery parts they desperately needed. Companies like UOP and Swiss ABB used to supply equipment to Russian refineries, but couldn't do business with them anymore because of sanctions. The brutal irony is that these Russian refineries were built with Western technology and expertise. So, when Ukraine bombed them and Russia needed repairs, they couldn't get replacement parts. Russian engineers were scrambling for months just to find basic equipment, with some facilities looking at repair timelines stretching months instead of the weeks the government had promised. They were also selling more raw crude at lower prices instead of valuable refined products. At the same time, their seaborne diesel and gas oil exports fell 6% to approximately 3.1 million metric tons in August. Russia was losing money on both ends. The whole global trade map changed too. Russia's traditional European customers were mostly gone because of the sanctions, so they had to pivot hard towards Asia. China and India became their biggest crude oil buyers, but this Asian pivot came at a huge cost. Russian producers had to offer substantial discounts on their crude just to stay competitive. They were basically playing a volume over price game, selling more oil but accepting way less profit per barrel. Chinese refineries even secured at least 15 shipments of Russian oil that were originally meant for India, as Indian demand dropped initially. The financial damage was absolutely devastating. Rosneft saw profits crash by 68% in the first half of 2025 compared to 2024. Lukoil dropped 51%, and Gazpromneft fell 54%. These companies cited global oversupply, sanctions effects, and currency volatility as the main reasons. But the refinery attacks made everything much worse. Russian fossil fuel export revenues in the second quarter of 2025 dropped 18% compared to the previous year, the lowest quarterly figure since the invasion began. The crazy part is that this happened despite Russia actually exporting 8% more oil by volume compared to the first quarter of 2025. They were selling more oil but earning way less money because of those massive discounts they had to offer. This disconnect between volume and revenue shows the growing impact of sanctions and how Ukraine's refinery campaign forced Russia into an impossible situation. The refinery shutdowns pushed more unprocessed crude towards international markets, right when Washington was putting more pressure to reduce Russian oil purchases. What Ukraine accomplished was forcing Russia into a lose-lose scenario. Either keep oil at home and face domestic shortages plus angry citizens, or export it at massive discounts and watch revenues collapse. Either way, there's less money flowing to fund the war. And that's exactly what Ukraine wanted to achieve. Now, to really understand why Ukraine's refinery attacks were so devastating, we need to understand Russia's history with sanctions. Because Russia has become the most sanctioned country in the entire world, with more than 23,000 sanctions slapped on them by countries like the United States, Switzerland, Canada, and the entire European Union. This is more than the number of sanctions of Iran, Syria, Venezuela, and even North Korea. In fact, even if you add up the sanctions on the next 6 most sanctioned countries, Russia still has more than double of their total. This didn't happen overnight. The sanctions actually started back in 2014 when Russia annexed Crimea, but things went absolutely crazy after they launched their full-scale invasion of Ukraine in February of 2022. Since then, Western nations have rolled out 18 distinct sanctions packages, with the latest measures in July of 2025 putting unprecedented restrictions on oil trading and refining activities. The European Union alone has applied 11 rounds of sanctions, with recent rounds focusing on dual-use items and trying to stop sanctions evasion. But here's the big one. The EU banned imports of seaborne crude oil and refined petroleum products. And this single move has cost Russia more than $100 billion in export earnings since late 2022. Western countries were smart about how they did this. According to Carnegie Endowment analysis, these sanctions were designed for gradual asphyxiation rather than an immediate economic shock. They wanted the effects to build up slowly, pushing Russia into what they called unremitting stagnation without completely crashing global markets. And the way it evolved was devastating. From 2014 to 2017, sanctions targeted technology transfers and financing for Arctic, deepwater, and shale projects. In 2022, things got serious with the comprehensive EU oil embargo and the G7 price cap mechanism set at $60 per barrel. By 2024, they expanded vessel sanctions, insurance restrictions, and technology transfer prohibitions. Then in 2025, they sanctioned Nayara Energy, reduced the price cap to $46.60 per barrel, and implemented software export restrictions. The January 2025 escalation was huge. The US Treasury sanctioned 2 major Russian oil producers, Gazpromneft and Surgutneftgaz. along with more than 180 vessels from Russia's Shadow Fleet. This was the most potent sanctions package yet, going straight after Russia's primary moneymakers. YouTube just dropped a mind-boggling announcement. It is paying creators $64 million per day. Why? Well, because YouTube doesn't have enough creators. That is why you see videos on your homepage that have less than 1,000 views, like this one. Now, of course, that doesn't mean everyone should start a channel, but if you've ever wondered about starting a YouTube channel or a faceless channel, now's kind of the perfect time. YouTube is paying creators millions every day, and it's pushing newer, smaller channels now more than ever. But I'm sure you have many questions on how to get started and grow a channel. We get questions in our email all the time from some of you guys. And that's why we've decided to put all of our YouTube advice into one YouTube video for completely free. So, if you are someone who's interested in starting your own YouTube channel, you can watch that video here on YouTube by clicking on the link in the description or the card on your screen. But what makes it brutal are the technology sanctions. Russian refineries are massively dependent on Western technology to make valuable products like diesel and gasoline. An expert noted back in 2022 that up to 90% of certain components like valves and pumps in Russian refineries are of foreign origin. Even more importantly, the brains of these facilities, the control systems and the microchips, are foreign-made, and maintaining them often requires foreign specialists. This created some critical dependencies that are now biting Russia hard. Their hydraulic fracturing equipment provided about 10% of total Russian oil extraction. That's about 50 to 55 million tons annually. And replacement equipment is completely unavailable due to sanctions. Distillation column components are essential for refinery operations, but Western-made units need specialized parts that Russian companies can't get anymore. Modern refineries depend on Western software and hardware for operational optimization and safety systems. And turbine technology, critical for refinery operations, has repair capabilities that are severely limited by sanctions. The Lukoil North Sea refinery incident in January of 2024 shows you exactly how this plays out. When a critical turbine broke down, Russian engineers discovered they couldn't get replacement parts from Western suppliers, forcing the facility to run at reduced capacity for months. This same pattern kept repeating across multiple facilities, creating a growing maintenance backlog that Ukrainian drone strikes have been systematically exploiting. The 2025 software sanctions added another layer of isolation. The UK and EU banned exports of sectoral software, including business enterprise, industrial design, and oil and gas-related software to Russia. This effectively cut Russian energy companies off from critical updates and support for their operational systems. This matters insanely for Ukraine's strategy. This technological dependency turns what should be a temporary military problem into a long-term strategic crisis. A drone strike on a refinery that might normally be fixed in a few weeks becomes a months-long shutdown because Russia can't get the parts or expertise to fix it. With sanctions cutting off Western refining technologies and spare parts, repairs become way slower and way more complicated. Ukraine's leadership saw this opportunity and pivoted to what they call a deliberate strategic approach. The attacks on Russian oil infrastructure are viewed by Kyiv as highly effective direct sanctions, bypassing the political reluctance of some Western allies to impose tougher measures on Russia's energy sector. The central goal is to directly hit the war economy and undermine Putin's ability to finance the war. This strategy leverages a fundamental asymmetry. While Russia has a formidable army, its massive size across 11 time zones has become a vulnerability. The Kremlin simply doesn't have enough air defense systems to protect thousands of potential military and energy targets spread across such a huge area. And Ukraine's been able to pull this off because their long-range capabilities have dramatically expanded over the past 3.5 years. They've developed new, domestically produced long-range cruise missiles like the Flamingo, which has a reported range of over 3,000 kilometers and carries a massive warhead. This evolving capability lets Ukraine inflict significant economic damage while pressuring the Kremlin to reconsider its stance and maybe enter peace negotiations. What blows my mind is how Ukraine completely transformed their approach to warfare, because this evolution is crazy. What started as basic defense has turned into sophisticated economic warfare that's hitting Russia where it hurts the most. Back in 2022 and 2023, Ukraine was mostly using imported Chinese drones for limited-range operations. Fast forward to 2024, they've conducted 130 long-range drone operations, striking 377 targets inside of Russia, including airbase and energy facilities. But in 2025, things went completely crazy. Ukraine is now producing 4 million drones annually, including those advanced Flamingo cruise missiles with massive 1,150-kilogram warheads. The pinnacle of Ukraine's capabilities showed up in Operation Spider's Web in June of 2025. Using just 117 small FPV drones launched from inside Russian territory, Ukraine damaged 41 aircraft across 4 air bases. They took out approximately 34% of Russia's entire strategic bomber fleet. The operation cost a fraction of what traditional military assets would cost when achieving effects that would normally require major air campaigns. And you don't need to be a military expert to see just how devastating this must have been. Their Brave One defense innovation platform has issued over 470 grants to drone and defense tech projects, creating an ecosystem that now supports more than 1,500 Ukrainian tech companies working on unmanned systems. Defense analysts call this strategic neutralization, using limited resources to impose massive costs on a much bigger adversary. Ukraine figured out they didn't need to match Russia tank for tank or plane for plane. They just needed to hit the right targets at the right time. Now, what's fascinating is how global oil markets reacted to all this chaos in August of 2025. You'd think with 17% of Russian refining capacity offline means oil prices would go through the roof, right? But they didn't. Brent crude averaged $64 to $65 per barrel through August, actually below the pre-crisis projections of $70 to $75 per barrel. Russian Urals crude traded at $47.60 to $55 per barrel, maintaining those $3 to $12 per barrel discounts to international benchmarks. So that raises the question, why didn't oil prices spike? You see, OPEC Plus has oversupply conditions, and major consuming nations were releasing strategic reserves. Asian markets saw modest price increases, while European markets stayed relatively stable because they had diverse supply sources. But here's where it gets really interesting. That is Russia's shadow fleet. We're talking about 800 to 1,400 vessels by 2025 that successfully transported most of the redirected crude oil to Asian markets. However, the system operated at way higher costs, with insurance and logistical premiums eating into profit margins and forcing even steeper discounts on Russian crude. Chinese refineries showed incredible agility during this crisis, securing at least 15 shipments of Russian oil that were typically destined for India after the US implemented tariffs on Russian oil. This shows how sanctions often just reshape trade patterns rather than eliminate them completely. Price-sensitive buyers quickly jumped on arbitrage opportunities. Looking ahead, the strategic outlook for Russia's oil sector shows mounting structural changes. Oxford Economics projects that if the EU price cap is effectively enforced, Russian Urals crude could hit $47.6 per barrel in Q3 of 2025, while lifting Brent to around $80 per barrel in 2026. This would seriously hurt Russia's finances, because their 2025 budget assumes an average export price of $70 per barrel. The August 2025 crisis also exposed sophisticated energy arbitrage mechanisms. India became the largest seaborne Russian crude importer, handling about 1.5 to 1.7 million barrels per day. That's 40% of their oil demand. This created vulnerabilities that Ukraine's campaign strategically exploited. The Trump administration put serious pressure on India, implementing 50% tariffs on US imports, specifically to force New Delhi to reduce its 1.5 million barrels per day of Russian oil purchases. This immediately created market opportunities for Chinese refiners. But here's the dilemma. The economics are just too good to ignore. India has saved approximately $12.6 to $17 billion over 39 months through discounted Russian crude purchases, with landing prices averaging at $2.30 to $13 lower per barrel than alternative supplies. These savings represent huge fiscal benefits that New Delhi has been really reluctant to give up, despite all the diplomatic pressure. What Ukraine accomplished is remarkable. They took a situation where they were vastly outgunned and outmanned, and they turned it into a strategic advantage. By combining technological innovation, tactical precision, and deep understanding of Russia's economic vulnerabilities, they created a new model of asymmetric warfare that's forcing one of the world's largest militaries to constantly react rather than act. The refinery campaign shows how modern conflicts aren't just about territory or military might anymore. They're about supply chains, technology dependencies, and economic pressure points. This is the era of a new warfare, where a smaller, more agile force can impose disproportionate costs on a larger adversary by targeting the right vulnerabilities at the right time. And the effects are still playing out across global energy markets, trade relationships, and military strategies around the world. How the future of this warfare turns out is something only time can tell.